Matt, you've kind of been through these cycles before. You watched credit. I mean, it got so bad in the last cycle that you and I were in that you could only buy four. Remember that when it
Yeah.
went from,
Mhm.
anything you want to four? That was kind of wake up and rude. Not saying it'll come back, but it could for sure.
I had five and that
Yeah.
was it. And they were
Game
like,
over.
oh, it's four now. I was like, but I have five. It's like, it's four. I was like, I get it, but I have five. I was like, so no more deals unless I sell two properties. And I was like, and the market's way down, so I can't do that.
That's
So
not
that
an
wasn't going
option.
to work. But I think the biggest thing that people are going to miss, and this is something, Mike, that you and I had been talking a ton about, which was margin, margin for the banks. So DTI is going way down. Credit score requirements are going up. But more importantly is margin from the banks. And they're not going to be able to artificially keep rates low. I got quoted from the bank yesterday because I usually talk to them on Mondays.
Hmm.
And the conversation was, what's the margin right now for the spread, i.e. what you're borrowing at and what you're willing to basically do a deal at. My 30-year fixed rate product is
As an
seven flat.
investor.
As an
As
investor,
an
seven flat.
Yeah.
And that's with, I usually can get away with begging them and pleading to get down to about 1.9 as far as margin goes. They won't budge below 2.5. So
Yeah.
250 basis points of margin, that means that they're getting a lot more conservative. That means that if you're going to borrow money, you're going to pay for it.
Yeah.
You're going to pay a lot for it. 250 basis points of margin for the bank. Think about that. That means for every 4 deals that they do, they got a free deal in there. That's
Mhm.
all margin.
Yeah.
And so this is margin. This isn't, well, what do you make off of that? That's what they're making. So they're making 250 basis points on every deal they do now. That means that things are tightening. And I've asked them, I said, is there anything going on or anything that you're seeing? They're like, no, we're just going to increase margin. We're going to increase our margin in these times because we know that we're going to do fewer deals. So they know this. They know they're going to do fewer deals. And because they know they're going to do fewer deals, they're going to make more money on the deals that they do. And that means that underwriting on those deals is going to go a little bit nuts. And I'll go sideways for just 30 seconds.
Sure.
I know of a deal. Somebody had hard money in the deal. They are trying to refi out right now. They
Yeah.
expected to refi out at 900 and the appraisal came back at 750.
Oh,
Yep,
that would be an unsuccessful burr right there.
exactly. Well, the worst part is it's hard money.
Yeah,
Question
exactly.
is at 12 points, do you think those rentals work? Probably not. Probably not.
No, no.
Not unless you want to be property managing for free.